Hello, it is Wednesday the 22nd of January and I'm making a crypto update of chart requests. I apologise, I meant to make this a while. I recorded this a couple of times but my throat gets sore and then I have to give up and stop. So hopefully this is the one that I make it all the way through, and if you are looking for just one particular coin, I'm going to go in order of the list here at the beginning so you can skip through until you get to it. So we're going to start with ETH. Now, as I said in my previous video, most of the crypto charts that I look at seem to have kind of potentially completed 5 waves up, which quite often means that we're a little bit vulnerable to a bigger 3-wave correction. One of the charts that hasn't done that is Ethereum. It's a little bit behind, if you like. By that I mean I think that we have potentially done 5 waves up from the low in August, and then we double topped in December earlier than everything else. We tagged the previous high that we made at the start of 2024. So we basically retested the 2024 highs, and unlike a lot of other charts, we could argue that we have in Ethereum made a big 3-wave pullback here. So as you know, when I measure zigzags or big 3-wave corrections or 5 waves, I measure the first swing and then I look at the second swing to have a relationship to the first swing, either be 61.8 of the first swing or equal to the first swing, which would be down here. So those are the two things that I kind of look at now, and I look for the middle swing, the B leg or the second swing, to be clearly 3 waves. And so we can say in Ethereum, we've clearly done that. We have made a 3-wave pullback. This third swing is 61.8 of the first swing. This middle leg here in the middle has 3 waves. And so potentially sitting around here and trying to find support from this daily 200 moving average puts Ethereum in quite a good position really to rally from here. And we had a really good reaction, you know, in the last week from this low. We've had a really nice bounce off this 61.8 level, which is why I think we've seen quite a lot of money rotating into ETH, if you like. So ETH potentially is looking pretty good. So the key support then on this pullback, because everything is pulling back today, the key support is going to be this 3,122 level. And Ethereum dollar really likes big round number levels. So I think we should really argue that the 3,000 is pretty key support for Ethereum, and underneath it we are likely to continue lower to 2,700. But potentially, I have to say, let's take off this measured move for a minute, because we have got this double top. Quite often, you know, that signals a trading range, and so we are a little bit vulnerable in Ethereum to making a bigger A, B, C, and we measure then from the high at the beginning of 2024, which would be from this high to this low, and we'd be looking for that bigger 61.8 level, and no surprise, that kind of puts us back in where this equal measured move is. So if we measure this swing high to low and project it from this high, we get 2,850, which is also really interesting support and resistance when I look left at these lows here. So I kind of feel like we've got another swing lower to come, at least in ETH, and I think it's going to take us down to somewhere between 2,850 and 2,700. And we could potentially, if we don't hold this level, or if we get stuck underneath it and it becomes resistance underneath this pivot level, which if we look left, has been a pivot level kind of all year, last year, then we are going to retest the lows of this sideways range, which is down here at 2,000. So that's how I'm seeing ETH at the moment. And we have seen quite a lot of money rotate into ETH, so I wonder if it holds up. And let's take a look at ETH Bitcoin, because ETH Bitcoin is really an interesting, for me, you know, it always used to be the kind of best indicator of alt season. We kind of really need, alt season tends to happen when ETH is outperforming Bitcoin. And when I look at what we've done here, I look at this, you know, from the low in 2019, there's a big 5 waves up. This is a monthly chart, and I've been looking for this declining wedge, this really long decline that we've been in since September 2022 to end when I put fib retrace levels on from this low to high, I've been looking at a few. We had a really nice bounce off this 50%, a really good bounce off this 50%. And then when we retested it in 2023 and the start of 2024, it held pretty well as support. We just dropped straight through this 61.8 level. And here we are now potentially at the next fib level, a 786 retrace at 0.0031. People ask me, where does the 786 fib come from? It's the square root of 61.8. That's all it is. And 886, which often gets tested in crypto, is the square root of 786. They just are levels that work. So here we are retesting and a little bit sideways at this 786. So no bullish reversal price action for ETH against Bitcoin. In fact, we could argue, that having gone sideways for 3 or 4 days, they're both pretty much doing the same thing. But bigger picture, this is still, unfortunately, a downtrend. So this is just a potential level where we could see a little bit of a bounce and an outperformance in ETH, but no sign of it in the price action yet. And on the weekly, we're kind of dangling underneath this pretty important level. So that's how I'm seeing ETH at the moment. I think ETH against the dollar has unfortunately a little bit further to fall, although it looks like it's being supported pretty nicely by that 200-day moving average. If everything else has a shakeout, which is what often happens in this market, if we break 2,850, we are likely, if we break this daily 200 moving average, or if we break down from where we are now and this 3,000 level, 2,800 to 2,700 is potential support, but there is also unfortunately the possibility that we make a bigger kind of ABC 3-wave correction back down to 2,000. So trade carefully in this one. There isn't really, well, there is money going into ETH, there really isn't any sign yet that ETH is set to outperform. Okay, next chart that we are going to have a look at is a request to look at Link, one I haven't looked at for quite a while, but this one is setting up really nicely. This was such a nice trade way back when we made this lovely bottom in which ended in 2023, when we broke out with a swing higher. And this is a really good example of what I like to see and what I like to look for and what I talk about. 5 waves up from this low, 1, 2, 3, 4, 5, very nice 3-wave pullback. When it's a wave 1, it can pull back quite a long way, which this one did. And, when the signal that we were on our way and really going to accelerate was when we got back above all of these weekly moving averages. So we could argue that this one, is just a 1, 2, 3, and we're in a big wave 4 going sideways here with another swing higher to come in Link. If we go down to the daily, I don't think my fib's in the right place. Just let me make sure I've got it on. Get my breath back. Here we go. Now, if this correction, so we started this correction middle of December, if this correction is over with a big drop, 3 waves and then a second drop, and we're on our way up again, we would like to see an impulsive kind of 5-wave move. And so far we haven't seen it. What I tend to do when this is happening, let's take all this off because this was where I thought we might find resistance and support. What I tend to do is I just put fib retrace levels on from high to low, and I kind of work my way up from level to level to level. And here we are in Chainlink, back above the daily moving averages. Just if we can stay above them, just about to get a bullish cross, which is really kind of what we look for. And then we're going to look for this to hold as support, and then hopefully to continue higher. And I would argue from this high to low, we're in that middle zone, the 61.8, 38.2 consolidation zone. So just like ETH that we looked at, we could say that this is ideal support for us to continue higher in Chainlink, as long as we stay above this daily 50. It works really well, this daily 50 moving averages support and resistance, and also this previous swing low. So I would say as long as we hold above 23 23 in Link, I think we've got another leg higher. And if this was our wave 1 off the lows, this next one should be, you know, if this was our wave, if this is our 5 waves up, right, 3 waves back, sometimes this is a big wave 3, I think, and then we've still got wave 5 to come, and this would be then wave 1 of 5, and we would still have 3 more swings higher. And if we put our big fib retrace back on from this high to this low here, when your first swing is from the 50% and you kind of pull back 50%, which we kind of almost tagged here, then our next target would be up here at this 886, which is all the way up at 47.50. So I think Chainlink is looking really good. The risk is that if everything is going to do another leg lower, then what we've seen here is just the first leg of correction, and we are likely to see a bigger pullback. But 23 is what I would really like to see hold as support, which is the back test of this fib level and the daily 15. As long as we hold that, we are still going higher. We've got more upside to come. Retesting the highs around 29 might be a wobble level, but if we can hold above 29, I think we're in our next big move higher, and 47.50 would be the target for Chainlink. So not a buy entry today right here. It kind of looks like we're topping out a little bit and rolling over. We just got a little 4-hour double top, which normally means back to the bottom of this sideways range, but I wouldn't be selling it yet, let's put it that way. In fact, none of these, even the ones where I think I think we might be at pretty important levels, we haven't got bearish reversal price action yet. We're still kind of holding up pretty nicely. It could turn into that, and that's why I say pay yourself. If you know, take some profit and pay yourself. Don't ride it all the way down again. So yeah, let's take a look then at the next one, which is Sushi. Gosh, I like this one. Now, I think this, just like Link that we just looked at, I think that we are in a potentially going to start a wave 4 here. And the reason is, if we go all the way back to the low in October 2023, I think this was 5 waves up, wave 1, 3 waves back, and here we are, and we're riding our moving averages higher. And if we look at the relationship between this first swing low to high and we measure from here, we reach that 2.618 level. 1.618 normally is like my first target in a big wave 3. So we had 1, 2, 5 waves up, but this held as support and we kept going. And now here we are at a big 2.618 level. So I think potentially we are starting a little bit of a wave 4 here, just because of the level we're at. And if we look at how long and how big this wave 2 correction was, I kind of look for them to be kind of similar, either in price or in time. So if we were to do that here, then, you know, we would just come back to this low at 3.9 in Sushi if we made a similar correction in price. But if we make the similar correction in time, that kind of takes us to May, which means that we've got some pretty nasty sideways trading. This wave 2 was very simple, 3 waves back. When you see that, it makes the wave 4 very often be kind of a triangle or a wedge sideways consolidation, and quite often it'll be 5 waves, not 3 waves of correction. It'll still look like a corrective pattern. It'll be choppy and overlapping, and so we are a little bit, you know, the other thing that I look at for overbought is how far away are we and how stretched are we from these daily or weekly moving averages. And I would argue in Sushi, although we're sitting very nicely on the daily 50 here, on the weekly we are pretty stretched to the upside, and we are kind of due a bigger correction. So if we go down to this daily chart, you can see that all the way up ever since September, when we started this really lovely big rally that took us above the 200-day moving average, every time we've pulled back very nicely, we have textbook tested this daily 50 moving average. 1, 2, 3, 4, 5, 6, we're on our 7th test. If this breaks, we are likely to come back to some of these bigger swing lows. And these bigger swing lows, you know, usually quite often come back to a previous wave 4, which I would argue could be down here around 3.5. So we're at 4.5 at the moment. So we're a little bit of a risk of a bigger pullback to 3.5. Now, if this is a big wave 3, then the most common retraces are 38.2. So if we measure from this low, that would take us back to these lows and maybe a little bit lower, 3.77, and potentially lower than that. So I would say, looking at this where we are sideways, it's kind of pretty important that we hold on here, because if we drop down and it's not a false breakdown, I would get out of the way, because I think that we could see a bigger pullback. This was quite an extended wave 3. We could even come back 50% down here to this swing low at 3.14. So perching and hanging on to pretty important support in SUI. If we lose it, those are the levels that are about. I really like this chart, and these wave 5s in crypto particularly are quite often the biggest. So this pullback is going to be a really good opportunity. It's just it won't be so much fun if you kind of are overloaded with it and ride it all the way back. So yeah, pretty important. Now, if we hold this support, obviously, if we hold that week daily 50 moving average again, and this is, this quite clearly is a correction from this high at the beginning of the year. So far it's choppy, overlapping and sideways. This is not a kind of impulsive move lower. If we break higher from this consolidation, if we were to close, for example, back above this daily 20 moving average as we did here, and that price is, if we close back above 4.7, then SUI is going up. But if we break this consolidation pattern lower, unfortunately, I would get out of the way and be prepared to buy it back lower. I think it's a really good opportunity. Okay, the next one we're going to look at is DOT. Now, let's take a look at this one on the weekly, and I'll take all my scribbles off and we will see where we are. Now, we could argue that this double bottom, we're making a really nice kind of bottoming pattern here. We had a double bottom, and normally with a double bottom, if you bounce more than 236 fib, you're looking at 50%, and then a retest of the highs, and that's kind of exactly what we've done here in DOT. So unfortunately, we're in a little bit of a nasty sideways range. However, this was quite a nice strong move, and here we are back, weekly moving averages in the middle. I kind of unfortunately don't like how we're underneath them, so I'm really neutral this one. I think it's still trying to make a base. I don't think it's done it yet. And again, just like SUI that we just looked at, underneath these flat weekly moving averages just says sideways range. Yes, we are holding these previous lows. We could argue about where we are in terms of fib retraces. Underneath the 61.8 level, that kind of points to lower, unfortunately. I think if we continue lower, the next support is going to be at 5.3. So if we look at this on lower time frames, you see how the 61.8 fib level was kind of support here and here. Now we're underneath it, 6.669. Yeah, unless we recover that and it becomes support, I'm afraid the path of least resistance here is lower, down to the daily 200 moving average, and potentially 5.3 next for DOT. So not a buy signal yet, and if you've got some, you may have to ride out a little bit more. It's a shame, I was really we could still hold these lows, but I was looking at this as a kind of really nice looking 3-wave correction. When you bounce from a 61.8 fib level, though, you've really got to get above and hold above this 50% level, and you can see it was a real pivot level. And also, if we look at it here, this is where our daily 50 moving averages, which is kind of lined up in a bearish set channel. So if we get above 6.6, our first target is going to be back to this pivot level at 7.6. And I would say that we've really kind of only bottomed if we get above that. Otherwise, we're kind of trapped in this sideways range that we've been in since the week before Christmas, and stuck for a month now in this little sideways range. A false break lower from here, or down to this 786 fib with a sharp bounce, would be really, really bullish. Much more bullish than just kind of grinding up higher from here. So yeah, not ready for DOT yet, unfortunately. Next one we're going to look at is XMR. request for that one, and I haven't looked at some of these for a while. Let's take a look at where we are with XMR. If we go to the weekly, now this is one that's broken out of a pretty nasty sideways range. This one's been in this double bottom, really nasty sideways range and couldn't break the highs ever since, gosh, 2022. Now we've broken out of this sideways range. Support becomes resistance, resistance becomes support, and the same thing for this weekly moving average. The problem is here that there's a little bit of a risk that this was actually just a bigger ABC kind of equal measured move correction, isn't it, in XMR? We're a little bit sideways at this equal measured move level here, 218. Now, when you reverse, as I said before, when you reverse an equal measured move, as long as you hold above the 61.8 on a back test, you're still going higher. It doesn't confirm the reversal. That's one of those levels that kind of confirms the reversal. So we're going to be bearish if it gets underneath 186. And if we can hold above 218 and it becomes support, we're still going higher, and 269 becomes our next upside target, where this swing is 1.618 of the first swing, and we're going to see a really nice fifth wave. Look, 1, 2, 3, 4, 5. So watching to see if Monero can break out and hold above 218, and if all of these privacy coins get a boost here, wouldn't that be great? I also like to see, does it line up with kind of fib retrace levels? These targets, it kind of does roughly with this 38.2 fib here at 260, 269. But the second target, if we push through 269, is going to be up here, this 61.8 level where we're 2.618 at 350, 352. So that would be a really nice second target. So pretty bullish at the moment, has back tested and held support, but hasn't quite broken out of the sideways range in XMR. And that's what I would need to keep going. 260 then, and 360 really for the next upside. Two targets if we can break out of this sideways pattern that we've been in. Okay, let's go back and look. A request for XLM. Stellar Lumens. So big picture, weekly. We're in that consolidation kind of triangle pattern. And one thing about these patterns, is they tend to repeat the fib retrace. So this first swing was a pretty textbook rally to a 786 fib. So if we're still going to be in this coiling up pattern, our first target on this swing was the 786, and that's exactly where we got to on the high. What's also a little bit of a concern here is if we measure this first big swing and we say this was a three-wave correction, potentially we've just tagged a kind of 61.8 level. So I have to say that this is coiling up, and it's not kind of ready to break out. Hit really good target on this move, but not quite ready to break out. Now if you reverse at a 786 fib, you expect a bit of a wobble when you back test the 50% level, which is here, and the 38.2 is your first target, which we tagged, and then you expect to come back to the middle and decide which way next. And so when I decide which way next, I look at the price, how did we get here? And it's kind of very, we're faffing around, unfortunately, in the middle. So I'm a little bit neutral XLM. I'd really like a better buy signal, and I'm a little bit concerned that this was, a bit of a double bottom and a three-wave rally. And here we are perching, just like quite a few charts, just perching on these daily moving averages. If we lose this daily 50 moving average, unfortunately, we are likely to come back and retest the lows towards 0.34 and potentially do another big leg lower. We could argue that this is potentially a little channel or bear flag. And so here's our first swing lower rally, and we're going to see a second swing lower, and we'll see a bigger correction. If I measure from this high to this low and project it from here, that sets us up then if we break down and if we lose these moving averages, we're just sitting right on it, then that sets us up to retest 0.31, and if we do a nasty bigger pullback here down to 0.18 and the daily 200 moving average. Now, all of those bullish vibes are off. If we can hold these daily moving averages and we see a nice big bullish reversal here for another swing higher, but at the moment we're just kind of sitting on this key support, and I don't know which way we are likely to go next, unfortunately. Okay, next request is for Sushi. Let's take a look, see if we can find Sushi. Here we are on the weekly. Pretty nice support, really. You can see previously, you know, on a weekly, when we get a nice weekly trend going, pulling back to this weekly 20 moving average, sometimes it can take a couple of weeks. It took a month here, but it should be really good support. So we can, if we can, to keep going higher. So we're sitting on support. No bullish price action for a reversal. Like if you trade, you mark your support and then you look for that bullish reaction. We've had a really nice bounce, but we haven't quite got the bullish reversal that we want to see yet. And if we look at where we are, here we are basically perched right on pretty key support. I'm going to get rid of these lines. Bearish cross of these moving averages. That does put us at a little bit of a risk here of another swing lower, and then we would count this as a swing lower, a three-wave correction, and another swing lower. And so our target would be base measured this way, like this. And first target would be 0.965 if these lows break. And I mean, what a great place to buy. Lovely ABC, 61.8 of the first swing, but not if you're holding an awful lot long. Now, the alternative is that we hold these lows that, in fact, we haven't finished yet. We could, you see, we could just do, this could just be the first bounce in a correction. We could do a bigger one, and then, you know, we measure from higher, and it's not quite so awful. It's just we haven't got that bullish price action yet. We're just sideways. And in this market, you know, when everything pulls, it all tends to, unfortunately, pull back together. So that's how I'm seeing Sushi at the moment. It's really important that we hold really important that we hold these previous lows at 1.26. If we don't, we could drop to 0.96 in the daily 200 moving average. Okay, next one that we are going to look at is Peanut. Let's see Peanut. Can't find it. That's okay, we'll draw him, no problem. Now, this is the Binance chart. I don't, quite often if the fibs aren't working, I put it back to 0 because they all obviously start at 0. So I tend to draw the fibs that we can see, and on Binance these fib levels have worked really well. This 236 fib was support, then resistance, this 50%, 61.8 level here. So I'm leaning on these fib levels, and unfortunately we've lost this 786 fib. We had a good go, couldn't hold it. And now here we are sideways at an 886, and I'm afraid I think this one might be done, unfortunately. Look, the key with all of these meme coins, you know, in previous bull markets, you could hold stuff and wait and then hold them and hold them. It didn't, you know, you did it without leverage, and eventually, you know, when the altcoin season came, they would eventually all, you know, take off, and it was hard to find one that wasn't going to take off eventually. With these meme coins, it's not really kind of how it works. You're either an insider and you're in at the beginning and you get right in on that first initial spike, and after that, all it is people selling to you. So, you know, the key in these meme coins is really not to, you can't be a long-term investor waiting, because it just bleeds away. They don't kind of sit going sideways, not doing anything, making a base. People just keep selling them. And this is unfortunately what's going on with this one. So I think if we could hold this week and regain 0.37, this is the 886 level, pretty good. And if we could bounce from here or see some green, then or some kind of bullish break higher, our first target is going to be 0.6. That's this previous 786 fib level, and that's really nice because if we bounce from here and we get above that, then the meat in the trade is between these two levels, between 0.6 and 1.3. That's the target. This is the key trade based on the fib pattern, but unless we get this bullish reversal here, unfortunately, we're still going lower. And then the 886 will be what we need to get above, and then this, 618 will be the target if we get above it. So peanut not looking terribly healthy at the moment, and probably has further to fall. Goat is another one that is not looking quite so healthy, and it's just lost this. Now this one, this is what I mean about trying to draw fib level, retrace levels. When I did it from this first swing here, we could argue this was pretty sharp, wasn't it, with this 786, but it was a bit messy here. So I'm not sure I put it to 0 like this, because I think they all start at 0, and we go like that, and then I look and see at these fib levels, and you can see pretty decent reaction here at the 61.8, at the 50%. The 38.2 was messy, it always is. The 236 fib had a reaction, and so here we are. And again, just like the last one, underneath the 786. So we need to get back above 0.292 to be having an attempt at a rally in goats here. So otherwise, still looking lower. And for me, next fib level is going to be that 886. 0.155, unless we can get above 0.29, and it's still bleeding out and going lower, unfortunately, in goats here. So no, not one for me yet, unfortunately. Let's take a look at another one. I need to make these. I'm doing chart requests tonight. I will do the ones I'm looking at tomorrow, I think. So let's take a look. We've got a request for Mobi. Now, what a lovely move this one is in. Whenever I see price action like this, especially when it looks like 3-wave corrections are happening, and I'm going to go down to the hourly to make sure. See this last correction here? It's really hard to see 3 waves in this. So I think it's quite likely that what happened here is this is our first swing, and then this is our correction, and here we are in our next upswing, and looking pretty good. I think, very nice uptrend. I would be looking for 0.209 next, and then maybe 0.297 if we keep going. This is really grinding higher, and there's no sign of a reversal yet. And if we do get a bigger sign of a correction, for example here we are going up very nicely in the trend. You just mark the previous swing low here. As soon as you lose that, you know that you're going to be looking for a bigger 3-wave correction, and that's exactly what happened when this previous low breaks. Same here, we were going up very nicely. When we broke this low here, first time we came back, we tested it, bounced off it. When you lose that, you're in a bigger correction, and it's time to get out of the way or just get ready. So here we are, we're getting a little bit stretched on the upside, which means we've got a little bit further to fall back now to this previous swing low, and that means that in this correction it's quite possible that we come all the way back to 0.12. We're at 0.16 at the moment. We've been up to 0.2, so that's quite a long way back. Just be prepared for that. Now, if I'm not sure, what I tend to do is look at fib retrace levels. So that big 236 fib level, I'm going to go from the low to the high here, and I'm going to go from 0.003 first and see if that's working. And if it doesn't, I will I'll put that down towards 0, because all of these mathematical coins started at 0. And so, in fact, to be more conservative with this one, I would say as long as we hold 0.15, which is this 236 fib, we're still in a really nice trend higher, and if we see a bigger correction than this previous swing low and this hourly 50 moving average at 0.12 would be where we come back to. So two support levels on this correction, 0.12 and 0.15, and we only come to the second one if this first one breaks. So this hourly chart of Mobi looking really good. 0.15 key trend support underneath 0.15, we could see a bigger pullback to 0.12 and potentially 0.1 if this whole cycle is complete. I don't think it is, but it's still trending for now. So Griffin is another request. Now Griffin has had quite a few nice, somebody said, oh, can I look at it? And it's had a listing on Kraken. It has, but you know, it's had quite a lot of it's had quite a lot of nice listings already, Griffin. So I think it's kind of moving with the broader market, unfortunately. So let's see where we are. Can't find it. Here we go. Can't find my chart. I thought I had it ready. And it's not here. Oh, here we go. Here's a Griffin chart. Right. In fact, now I had it. Let's... one second. Here it is. Griffin. Now, this one, let's take everything off. I really like how this one trended. You know, this big rally, 3 waves back, 5 waves up, 3 waves back, 1, 2, 3, 4, 5 here, which I thought was like maybe a wave 1 of 5. And now here we are in a really nasty sideways range, typical, well, you know, it's like Bitcoin's horrible sideways range. And so I'm looking at this thinking, you know, here's the problem when you see these choppy overlapping moves higher. Here, you know, we're trending very nicely. The swings when you are trending don't pull back into the previous swing, but in a wave 5 you get very choppy and overlapping, which is what we're seeing here. So this is either a correction or a little bit of either a bigger correction or a little bit of a choppy wave 5. So rather than go from the launch, I'm gonna let's put this back to 0. And say that really in this kind of choppy overlapping move, which I think we're still trending higher, the key support, and we could see another swing lower to, is 0.49. And if we go down to an hourly, that would line up with us making a big kind of 3-wave correction. It looks like 3 waves up here. So 1, 2, 3. So for me, I think that we are in a bigger correction, and based on the look of the price action, and this would be where I would be looking for it to come back to for an ideal equal measured move lower. We've broken this 61.8 level here, so that's not what we're looking at. And so 0.49 is pretty key support for me. That's the hourly 200 moving average and a whole bunch of other things. Now, what happens if we don't hold this 0.49 level and we drop underneath it? Remember, previous swing low, so we could potentially come back to 0.39, maybe a little bit lower, 0.38. If this 0.49 level doesn't hold, I would lighten up my bag and be prepared to buy it a bit lower. I quite like this one. I think for me, and I don't think I have enough, so for me, I'd quite like to see it do that. It's a buying opportunity. So that's how I'm looking at Griffin at the moment. 0.49 would be ideal pullback support with an equal measured move here in this pattern. Okay, next one we're going to look at is AVA-AI, which I might have hidden somewhere. Let's have a look what I've been... Did I make a chart for this one? I thought I did, but I... AVA-AI, here we go. I knew I did. Now, if this is, I've got my Heikelashi on. This is another chart where clearly this was a really strong, lovely, impulsive move, and you would normally expect in a big impulsive move when you finish 5 waves to pull back to the previous wave 4, which it looks like we did. We made a pretty nice base here. So this is kind of where I would expect this to come back to as support in a really nice 3-wave move. So potentially in AVA-AI, this 3 waves is done. I would also say if we measure fib retrace of this swing, this is the 50% level, which is an ideal place to pull back to. 3 waves back to a 50% retrace is kind of one of my favorite chart setups here on the daily. The problem is sometimes the first time you launch, you don't they can turn into bigger corrections, you know what I mean? So potentially this was the first swing and we've gone 1, 2, 3, and we're going to see a bigger one, and it's a little bit nerve-wracking, if you like. If I put the daily on, you can see, although we've had some really nice moves, I think we are going a little bit sideways here. A daily close underneath that 50% 0.17 level would point to a bigger swing lower, and it would suggest to me that this is potentially a big 1, 2, 3 correction, or we are going to see another leg lower from here, and it would have a relationship to this first swing. So by that I mean I measure from this high to this low, look from here, and we could drop a little bit lower down to this 0.618 level first at 0.13, and potentially, gosh, down to 0.63. If I'm doing it wrong, it might be a little bit lower. So 0.12, 0.13, and potentially then 0.05. So how do we know that we're going? At the moment, this is in one of those choppy sideways places. So you either decide you're going to lighten your load and buy it back at the lows, or you're going to look away and hodl and ride it out in this AVA-AI. I think all of these AIs, you know, if you've done your research, you'll know why you're in this coin and why you like it. But, you know, there are going to be people freaking out and saying, oh, this is a head and shoulders pattern and here's the neckline. And, you know, we could see quite a lot of bearish FUD if this breaks this support level. But when head and shoulders patterns fail, it's always because they're an ABC corrective level pattern. And so a false break under this neckline that tagged that little bit lower, that 61.8 level, that would be a really good bullish trigger for AVA-AI. But at the moment, unfortunately, I think that we are likely to come back and retest these lows, and I would look for that false breakdown, and I would look for that big 618 level. That would be a really good, a false breakdown to there would be a really good bullish look, and that comes in at 0.137 then for AVA-AI. So yeah, still a little bit choppy, unfortunately. Next one I'm going to look at is Hive. Let's here's Hive. I did get that chart ready. I had Mobi ready as well, look. Hey, now let's put regular candlesticks on and see. For me, this one on the weekly has started to make what you want to see in a bottom, right? If you think that a downtrend is lower highs and lower lows and lower, as soon as you flip that and you reverse it, which we did, we made a higher high. You're now looking for this, with this bullish cross of these weekly moving out, we're looking for what we're looking for here, a big pullback into these weekly moving averages to continue higher. So we've done our first big swing, we've kind of broken this downtrend. Now we're looking for these to be support and this swing low. So if I go down one time frame to a daily, you can see we pull back to the daily moving averages here, and it's just a matter of when is this correction going to be over. Now, if we do the same thing we've done with other markets, you know, here in the middle in this daily 50 would be a really good spot. It's just that we don't have any bullish price action here. If I look at where we are in terms of fib retrace levels, this 236 fib and 38.2 was nice, but we're underneath this 50%, which unfortunately points to a little bit lower, and 0.35 before we make a bottom, and potentially, you know, we could do more than that. So not I'm expecting a higher low and this to turn up higher again soon, but we don't have any sign that we are there yet. And potentially it's a good place to do it. You know, it's a really good place to find support. So I would watch this. If this makes a bottom here, and when I say bottom, like, you can either wait for a really bullish daily candle or a daily, which we haven't got, but I also like to look at lower time frame moving averages. So here on the hourly, you can see here, so let's go back to previous bottoms and talk about what I mean. So here you can see all the way down, these hourly moving averages held us down. When we got above and found support from them, then we saw a really nice move higher. Same thing here, held down, held down, held down, got above, found support, really nice move higher. Sideways at these daily moving averages, got above, found support, and we were going up again. So here we are, same thing. We're being held down, going sideways by these moving averages. If we can double bottom here and flip higher or break these highs, that would be a really good buy signal. You could put an alarm on that trend line to alert you when it's doing that. But if we just continue lower and this little flag pattern breaks lower, it's not ready yet, unfortunately, and we are still going down. You know, we need to look for a better bottoming pattern here. Double bottom, double is always a good one as well. So a good level to maybe bounce from in Hive, but just not the price action to do it yet. Now, if we do bounce from here, our first target is going to be back to this daily 20 moving average, and then above it, we're going to look for a retest of these highs. And then my first target in this is the big 236 fib level at 0.91. So watching for a bullish reversal here. No guarantee we're going to get one. It's a really good place. And again, if we can recover these daily moving averages, the upside target in Hive is going to be 0.915 next. Next one we're going to look at is LMT. Limitus. Pretty new one, so this weekly chart won't help us. And here we are on the daily, and what a really nice look this is. If we look at this, we can see it's 5 waves up, textbook. So normally if you see 5 waves up, your correction, you would expect to see 3 waves back to the previous wave 4, but maybe 50% of the entire move, something like that. And so potentially this one is kind of in the range for that, because we have pulled back to this previous swing low, 50% of the entire rally. Even if I put this to 0, we can see that, because that almost is 0, we can see that this is 50% of this entire rally. So this is pretty good. So what I want to see here is I want to look under the hood and see, does this look like a pretty nice 3-wave correction? Because in which case we're good to go. Here's the problem though, it doesn't quite meet my rules because the B leg in the middle doesn't really subdivide into 3. So one of 2 things happened here. Either this was 1 and then it went 2 like that, in which case we're done and we're on our way up again. Or this is just the first swing and we're going to do a bigger 1, 2, 3 like this before we go. And it might even be a 1, 2, 3 with a slight, you know, I don't know which one it's going to be. So we're going to look and see if this 50% holds on a retest. It looks like we're pulling back to it in a pretty nasty shakeout. That doesn't, you know, just because this is a pretty nasty move today doesn't mean that this bigger picture 5-wave really nice bullish move is invalidated. It's still really nice. It's just we're looking for that bigger 3-wave correction here. So we're going to go back and measure high to low from this high. 2 support levels then. If we 0.144 would be ideal. Just 61.8 and then we carry on higher, but we could retest these lows, and if we make a false breakdown of this neckline and freak everybody out, then the level we're going to be looking for is 0.0878. So those are just the 2 levels. Retest these lows and potentially a breakdown here to 0.878. Don't be, it's going to look like a head and shoulders. If it's not a head and shoulders, then it's just a correction, that 0.87 is we're going to be where the support is for LMT. Okay, next one we're going to look at is GMT. Where did I have GT? Sorry, now I'm looking at GT. There we go, page 10. GT. What a ripper of a run this one has had. So, key questions about targets. Now, if I measure from this first swing low to this high, and here's our lovely wave 3, then I would expect this wave 3, which is lovely 5 waves and a typical crypto really extended 5 wave here, 1, 2, 3, 4, 5, to be 1.618 or 2.618. So this is 2 targets and we're close to it. 24 was the first target and 37, if we keep going, is the second target in GateToken. So if you're in this one, this is the zone where we kind of need to be taking some profit. And this is a really extended wave 5. We could come back quite a long way from it. So pay yourself. Again, let's go down to low time frames and look at these 15-minute moving averages. I would say, you know, at the moment all the hourly haven't quite flipped on the hourly. We're still riding these hourly moving averages higher. As long as we don't take out this swing low, then we're not in a bigger correction, and we've already tested it once, and so we're all good. 21.7. As long as we hold 21.7, we're going to retest these highs, but I urge you, between 23.3 and 24 is pretty tough resistance. I would think about taking some profit there, because if it, you know, it is liable for a bigger correction if we reverse here. Okay, next one we're going to look at is UFD, Unicorn Fart Dust, which I did have a chart for. Here we are. This is another one that's made. Look, let's look from the high. This is CoinEx chart. Big 3-wave correction from 19th of December, 1, 2, 3, and lovely big 5 waves up. That means that we are likely here, and you can see we got very choppy overlapping in this last swing. That means that we're vulnerable to a bigger 3-wave correction and maybe 50% retrace, and we're likely to come back to this previous bigger swing low. And if I mark in Unicorn Fart Dust from this low to high, 50% is here. Let's go to all-time lows, because we don't know when this really started and whether we've got the full picture. And if we look here at Unicorn Fart Dust and assume this coin started at 0, then 50% retrace and the equal measured move from this high and this previous swing low, and a really important pivot level. Look left here at these highs and highs and highs. So 0.21 is the ideal place for this to find support and turn up higher again. And if we overshoot and we go to the 1270, it's likely to be 0.16 in this swing low. So, but 0.21 is definitely the first level that I would be looking at, and this was where this correction would be a really nice equal measured move with a lovely 3-wave in the middle here. So 0.21 is where I think Unicorn Fart Dust comes back to, and if you're waiting to buy this one, this would be a really good place to look. Let's see, I've got a couple more to do. Harmony 1 and Algo. Okay, so Unicorn Fart Dust 0.21 is where I would set an alarm. Actually, I think that would be helpful. Then you don't miss the pullbacks, do you? Okay, here is Harmony 1. Let's take a look at where we are with this one. I'm going to go to the weekly chart, because this one's been around for a while. What a lovely base this is making. Now the problem is, this is our lowest low here, right? So this is where we're going to say the downtrend ended. And so when you look at the rally, the one thing you don't want to see is it be an ABC kind of corrective move. So if this is our lowest low here, and we measure from this low to high and project it from here, kind of has a little bit of that lick, which is a bit frustrating. Now, if I'm wrong about this, these lovely weekly moving averages that we're sitting on here should be support. You can see they were previously pretty good resistance, and when we trended higher, they were pretty good support. So I'm looking for this to see if we can bounce from here. And if we go down to the daily, we can see that potentially 1, 2, here's our first swing, here's our correction, I think. Might just be to here. So we're looking for that, again, mathematical equal leg. And the first equal leg, unfortunately, is a little bit lower here, 0.17. Where does that put us with the weekly moving averages? Yikes, the spike underneath them if we continue lower. So unfortunately, I think we're going to have a bigger pullback if we lose these lows here at 0.02, which we're just teetering on, aren't we? If these lows go, then 0.0175 is where the support is, and the daily moving average in harmony. If we hold these lows, I'd like to see a really big bullish reaction, and if we're going to do a bigger ABC, I will move this calculation. So yeah, teetering on potential support. I think this probably goes a little bit lower, unfortunately, but never say never. You know, it's not broken until you actually do break it. Harmony 1 then, and then, you know, of course, we've got our wave 1 in. This would be wave 2, and so this next swing higher would be wave 3, which, if it's going to be a really nice impulsive move, will be the strongest one, so you don't want to miss it. Okay, next chart we're going to look at is Algo. Haven't looked at this one for a while. Let me see where it is. Let's see Algo. Let's look at Algorand. Now, I'm going to go to the weekly chart for this one. This is a really nice look, but a bit of a tricky. First time back to this weekly 200 moving average, we kind of banged our head. I definitely like the look of this. 5 waves, 3 waves back, and let's go down to the daily and see how this. I'd like to say this is 5 waves, but this got really stretched, and this is the problem when you have a really strong wave 3, that the wave 5 will fail or it'll be truncated. Either way, we've started a big corrective move lower here. We've got 1, 2, 3, 1, 2, 3 up, and so I feel like this is our first swing, our bounce, and we're going to see another leg of correction lower. This is a daily chart, so this is another one. So if this is in fact a bear flag, or this little channel here from this low just before Christmas breaks down, so this would be our little flag pattern. Here's our first swing. If the daily moving averages don't hold and send us higher, and if we come back to the bottom of this channel and break down, because we've already got 3 touches, I would expect either firstly a retest of these lows, and secondly I would expect an equal measured move down to the 200 moving average. So again, this is another one just teetering on support, and I think that there is a risk that because of this, if this was a new swing higher, this would not be this choppy overlapping look. It would be less likely. So Algorand, we just kind of need to watch out. I closed underneath this daily 50 moving average, which has previously been pretty good support and resistance, and that is at 0.39. A daily close underneath that sends us back to the bottom of the channel and the next swing. So high to low. Again, first target then, retest these lows and 0.29. Second target, unfortunately, down to the 200-day moving average and potentially 0.16 for Algo. So buckle up. Wave 1 looks like it's done. This is a big wave 2, and then hopefully, just like a lot of these, wave 3 could be the next one. Okay, that's all. I will be back with some more that I'm looking at tomorrow that I like the look of. Let me know if you see anything interesting. Good luck, and thanks for your